It's expensive to grow older in this day and age. Folks who prepared for retirement with professionals are feeling confident, whereas folks who have put it off feel like they're burning the candle at both ends. Coming up, we offer some tips to navigate your way to a successful retirement on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts, Mark Stimson and Casey Elkins. You can find them at Elevated Financial Management right here in Seattle. And between the two of them, 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for retirement. They are certified financial fiduciaries. And folks, we can tell you this. They have a wonderful resource website. Check them out, efmnw.com. That's efmnw.com, all letters. You can check out the TV show, Elevate Your Wealth. Links are there for you, and all of our radio shows in podcast form as well. We're going to give you an opportunity to get on their calendar, see where you are in your retirement planning process. Again, if you haven't started or maybe you need that second opinion, these appointments will be ideal for you, so stay tuned. So according to this new bank rate survey conducted in June of 2023, so just a couple of months ago, the average American is feeling the effects of inflation in firsthand, and it's compromising their financial security and ability to save for retirement. Now, the concerns of the American people range from credit card debt to saving for retirement to inflation to the future of Social Security, Medicare, just to name a few of those concerns. And at the top of the list, folks are very concerned about a potential recession on the horizon, or should we say the chances of a recession. So, Mark, let's just bring you in and just overall thoughts on kind of where we are now. What's the barometer?
You know, it is. There seems to be a lot of doom and gloom everywhere we turn right now. The news, radio, all the internet in what's going on in this world. And there's a lot of trepidation that people are feeling, anxiety. I've been trying to get a lot of my clients to just step back a little bit, take a little bit of a deep breath, and realize that this is why having a plan that we talk about each and every week takes so much pressure off of people, and they feel so much better. Because you're right. Right now, the Fed has been raising rates, which makes it hard if you want to go and maybe buy a new car, or you're going to refinance your house, or you're looking at a reverse mortgage. We could go on and on. Credit card debt, as we know, has gone through the roof. The average rate right now, I think, is pushing close to 21% interest. It's actually the highest that it's been since bank rate started tracking rates in 1995. So, or 85, I should say. So, you know, the bottom line is, if people are anxious about everything right now, and a plan will take so much pressure off if you're willing to talk with someone. And that's what we want everybody to do, is realize this isn't all doom and gloom. There is a way to get through this. Inflation is rampant right now. We're all feeling that to a large degree. But if you have a plan, it's a lot easier to weather the storm, right? It's like being in the ocean on a cruise ship in a hurricane versus, a small 30-foot boat. It's a big difference. And so right now, everybody's rocking and rolling a little bit, but we want everybody to realize, don't get so discouraged about everything, because when that happens, we tend to do nothing. We don't want to make any kind of a move. And if that happens, that can really be just as bad, if not worse sometimes, than making a decision that might not have been perfect, but it's taking you in the right direction. So please, you need to give us a call and let's have a discussion so that you don't get so worried about everything that's going on in the world that you do nothing.
I mean, we talk about it all the time on the show. It's, having a plan is being proactive, right?
Yeah, exactly.
Not having a plan, you're sitting there and you're waiting and you're going to be reactive. So you want to be ahead of this. So it's all about having a plan. So Newt Gingrich, former Speaker of the House, joined Larry Kudlow on Fox Business to discuss how to restore the U.S. economy and get it back on track, particularly when it comes to the future of Social Security and Medicare. Gingrich saying that he knows what blueprint to use to restore the economy to its prior glory.
There's not enough credibility today to do anything significant with Social Security. But the truth is, if you move towards dramatic economic growth, we go back to the 3.5%, which we ought to be at, which was the historic average. That actually extends the life of Social Security, and it extends the life of Medicare, and allows you to have a lot more time to have a discussion about what to do next. But you've got to establish a really big growth rate, and you've got to establish real control on spending, and you have to repeal a large part of the radical regulatory machinery that has been set up over the last several decades. You do those things, the economy's booming, you can have a very different conversation about Social Security.
Again, former Speaker of the House, Newt Gingrich, on Larry Kudlow's show on Fox Business. Just your thoughts, Casey, just the former Speaker and those comments.
You know, I think that some big changes do have to happen, really to bolster the economy and keep things running. But I will say this, that I don't share the same idea that it's that easy. I mean, listening to that clip, it makes it sound like it's just so simple, and that's the end of it.
It's turnkey, right? You just do this and bang, there it is.
That's it. And that's really just not the case. You know, at the end of the day, I mean, if we look at history, if we go back to 2008, things were very difficult and we saw the stock market fall. But even after the stock market recovered at that time, it still had lasting effects on the economy beyond that, right? It had a lasting effect into everybody's lives from the top of the stock market to the bottom, from the peak to the trough. And so right now, I mean, we're kind of in these very unknown times. I think we all understand that. I wish it was as turnkey as it sounds in that clip, and that may be a great indication of what's to come, but it really isn't going to happen that fast. And again, as Mark was mentioning, it comes down to having a plan, right? This is where you know, if we're living and dying by what the talking heads have to say, if that's what's giving us the ability to sleep at night or not, then we are not setting ourselves up properly for retirement. We're not set up properly to be successful and to have the stress-free retirement that we want to have. You want to add something to that, Mark?
Yeah, I was just going to say, he talked, you know, so much about Medicare and Social Security, and we do believe some big changes are coming to Social Security. We're planning right now with my clients to possibly see around a 25% reduction, which that's significant. Everybody, I want to listen to that again. 25% reduction could happen in a decade. We know that the number of boomers has gone through the roof. There's probably 10 to 12,000 a day that are going on Medicare and Social Security, and that's putting a lot of downward pressure on those trust funds. And we all know that with less people working, which is where our money comes from for Social Security and Medicare, less people are being taxed to pay into the fund. That's creating this pressure. Then you put the COLAs that have been put on these accounts over the last 2 years, and that is a lot of pressure that we've got to get figured out. But this is where, if you don't have a plan, can you imagine getting reduced in 10 years from maybe $2,000 of Social Security coming in to $1,500? How devastating is that going to be if you don't have a plan?
Especially if that makes up a big chunk of your income, right?
Yep,
Which for a lot of folks it does. If that's the majority of your guaranteed income is Social Security and it gets cut like that, man, that's really
it's going to hurt.
Yeah.
Well, and we often get into those conversations about the what if scenarios, and that would be the conversation you're having. What if this happens? How are you going to compensate within your own plan? So the key there is to have the plan. We want to tell you that we're here to help you. We have spots on the calendar with Elevated Financial Management. We have 10 of them. They're exclusive for our radio listeners. Now, these are no cost, no obligation, no pressure. If you've got at least $250,000 saved towards your retirement, these strategies are going to work best for you. Now, those 10 appointments are open now. We'll tell you more about them as we move through the program, but you can call and grab one. Again, if you do not have, if you haven't even started planning, this is a great opportunity. But we're also here for those that are halfway down the path. They need a second opinion. They are not being communicated with. They are frustrated. They're a little scared. Get a second opinion. Grab one of them right now. 866-668-3625 is the number to call. That's 866-668-3625. So I have a ton of questions, but I look at all these questions that I'm going to throw at you guys, and it basically comes down to this. You know, the answer to the question is to have a plan. And Casey, we talk about it up one side and down the other. If the economy is rocky, you're going to be worried. Don't panic, right? But have a plan, have a method to whatever your madness is.
Exactly.
That's it. I mean, you have to. At the end of the day, that's really what it boils down to. I think, a lot of the things that we talk about, as you mentioned, Morgan, right? We talk about all these different issues. And as I said before, if you live and die by those issues, that's going to be a problem for you in retirement. You've got to have a plan. And the key here is that plan has different levers that can be pulled in different circumstances, right? We don't know what's going to happen with Social Security, but we know that there's a potential for an issue there. We don't know what Medicare looks like in the future, but we know that there's a potential for a lot of changes. We don't know what the stock market's going to do today or tomorrow or next year, but we know that there's a potential for a lot of changes. And so this is why what we offer for everybody boils down to a written financial plan put together by our team of certified financial planners. Don't hesitate. Pick up the phone, give us a call, and we'll have that discussion with you.
All right, we've got it. We've got 10 spots. And again, get in here, grab one, and you're started down the path, or you're getting that second opinion. You are changing directions. 866-668-3625 is the number to call. Again, 866-668-3625. We talk about just the importance of having that roadmap to get you to and through retirement. There's so much going on in our world today. And of course, we've been talking about the economy. Is there going to be a recession? How do you handle it? What does your portfolio do? Do you even know? Folks, having a plan will give you at least that ease of mind knowing that you have started down the path and you're working with professionals to get it done. Call the number now. Grab one of these 10 spots. This is a written plan, and it is for you. Okay, 866-668-3625 is the number to call. That's 866-668-3625. 10 spots. They will go fast. Don't miss out. 866-668-3625. We'll get you on the calendar with Elevated Financial Management. You'll meet with Mark Stimson, Casey Elkins, and the team and talk about where you are in your retirement planning process. All right, coming up on the other side, when we come back, we've got the results of a new survey that asks about 3,000 retirees what their favorite investments are in saving for retirement. You don't want to miss it. Coming up next. Welcome back into Elevate Your Wealth. Your host, Mark Stimson, Casey Elkins, Elevated Financial Management, where you can find them right here in Seattle. 42 years combined experience between these two in the retirement planning business, helping hundreds of their clients get ready for their postseason. Yes, their golden years, their retirement. They are certified financial fiduciaries. I'm Morgan Patrick, consumer advocate. Each and every week we go, we get into all these different topics when it comes to retirement. There's a lot that goes into your retirement. So make sure you have a plan. Make sure you're working with professionals, a fiduciary, and map it out. Have that ease of mind knowing that you're working with someone that does this on a daily basis. You have a coach. You have a teammate with you to help you get to retirement and through retirement. We're going to give you an opportunity to get on the calendar with Elevated Financial Management at no cost, no obligation, no pressure. Stay tuned for that, exclusive for our radio listeners. So BlackRock, guys, familiar name for all of us when we talk retirement, Investment Management Corporation, asked nearly 3,000 retirees and savers out there to describe their favorite investments to help grow their nest eggs. So, Casey, I'll get you started. You guys can go back and forth, but there are a lot of these. So take some notes out there in Radio Land. And, this is something that you can have a conversation with Elevated Financial Management when you come in. So the first one, ETFs. Jump on that.
Yeah, according to the survey, 16% said that ETFs were the top on their list. And we get it. I mean, an exchange traded fund, they started in 1993. In recent years, they're a lot more popular, and we understand why. Typically, they have a lower cost than a mutual fund. And there's lots of different versions of an ETF out there. So there are managed ETFs. There are ETFs that are just kind of a bucket of stocks and bonds, or maybe just different stocks. There's ETFs that track different indexes. So there's lots of choices out there when it comes to ETFs. And it's something that Mark and I use quite a bit inside of our clients' portfolios. One thing that's very different between an ETF and a mutual fund is the mutual funds trade at one price at the end of each day. So at the market close. An ETF trades at different prices throughout the day. So it's actually readily available on the exchange. as I mentioned, they tend to have lower costs. And so it's a lot of times an easier barrier of entry for folks to get into it and have some built-in diversification by just purchasing that one ETF or maybe multiple. But the question is which ETF is right for you, right? Because there are so many choices. It's about figuring out the one that is appropriate or the multiple that are appropriate in your circumstance and what you're trying to accomplish. And again, that really boils down to having a plan. So there's lots of different investment choices. Another one that's on this list are annuities. What'd they say about that one, Mark?
You know, the interesting part that I want everybody to think about is this survey was conducted by BlackRock, which is the largest money manager in the world. And now there's the dreaded A word, as Casey mentioned.
Wait a minute. Are we allowed to say the A word on the radio? Can we say the A word?
Cut it. Exactly. Get rid of it, right? But you know what? People need to understand how powerful an annuity in the right situation can be. In this survey, 21% are saying they're using an annuity now to boost their retirement strategy. And I have a couple of different white papers that back all of this up. Actually, an annuity added to your portfolio can take up the chance of a much higher success rate. We call it a Monte Carlo simulation that would be run if you do have an annuity. Now, the issue is there's different types. And right now, we're big fans of income annuities if they need income. If they don't, there's a way to protect principal, that annuities that don't have any fees. I'm not a big fan, I don't think Casey is either, of the variable annuity.
Not at all.
That's the one that's going to carry probably the highest fees of any investment that there is out there. So we stay away from those. And the problem is a lot of people talk about annuities on the radio, the Susie Ormans of the world, Ken Fisher. They don't explain that there's several different types. You need to talk with someone to see if an annuity will improve your own personal retirement plan. And I will venture to say that it can make a dramatic difference if it's used in the right way. Do we still want to use dividend-paying stock? Casey's a big fan of that, so am I. So depending on where your income is coming from may determine the amount of annuity that you need. The lower you have in guaranteed income, maybe the bigger percentage you might want to have in an annuity. And it could be flipped the other way. If you've got a lot of great income, several pensions coming in, well, then you don't have to worry as much about the annuity world from an income standpoint. So again, we can't overemphasize. Come in, talk to us, let's have a conversation and see if we can't improve your own income and retirement situation.
And really, I mean, it's just a tool, right? That's all it boils down to. It's just a tool inside of a plan.
Yep.
The annuity is not the end all be all, but neither are ETFs or stocks or bonds or any other thing that we use to create a plan. It's just a tool inside of the plan to do something very specific. And the key is that it does it really well. Right? Yeah. So you got to have the opportunity, have the conversation.
I was going to say it's worth the conversation because there are so many. I mean, there's so many different types, and you can customize annuities, for what you need out of them. And again, but it's an individual conversation. You need to make that decision, but work with a professional and see if an annuity, a particular type of annuity, would be a good fit for what you're trying to do with your retirement planning. We want to, open it up right now, and we have appointments available at Elevated Financial Management, and these are no cost, no obligation, no pressure. You can talk about maybe some of your favorite investment types. Maybe it's ETF, maybe it's an annuity, maybe you hadn't even thought about an annuity. You could certainly start having that conversation now. We have 10 appointments available at Elevated Financial Management. They're no cost, no obligation, no pressure. If you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. The number to call to grab one of the appointments right now, 866-668-3625. That number one more time, 866-668-3625. So BlackRock Investment Management Corporation asking nearly 3,000 retirees and those that are just out there saving money for their retirement to describe what their favorite investment types are to help grow their nest egg. So we've talked about ETFs. We've talked about annuities. What about just cold hard cash, guys?
I would say cash is king. And apparently everybody agrees with that. It says 46% of the respondents say that cash is the best. But here's the circumstance. Cash is king under the right circumstances, right? That's really the key. When it comes to our investments, cash is okay for a portion of it. But if we have all of our money in cash and the market runs up, we're going to miss out on all of that, right? We're sitting on the sidelines. And so we see that nearly half of the Americans came through in this survey are keeping at least some of their retirement savings in cash. Unlike stocks, cash don't obviously run up and down with the market. So we understand that we're lessening the volatility, but we want to be very careful about how much we keep in cash. Again, because inflation will eat up those dollars. We might miss out on some good growth. When things go down, when the market does go down and we have money in cash, that's great. But we don't want to be so conservative that we don't really have any growth potential inside of our accounts. And so what we end up seeing a lot is the folks that do hold a lot in cash end up doing that because they're afraid, because they don't have a plan, because they haven't had this conversation, and they don't have things structured the right way. And so they become so conservative that they end up missing out on the upside potential. So we want to make sure that we're being balanced as we structure that to make sure that we have a plan that's really going to help us as we move forward closer to our retirement. And so sometimes what we see is the opposite, where folks are really, really aggressive and they've got a lot just in individual securities or stocks. What do you think about that, Mark?
Yeah, and we believe that's a central part of our planning process. We want clients to have stocks. We're a big fan of stocks. Equities over the long haul, we believe, will be the biggest return in your portfolio over time. The problem is it also creates a lot of trepidation and fear when the market is very volatile, like what it's been the last 2 years. Everybody tends to start to freak a little bit, and then they want to jump off that train, and so they jump off at the wrong time. Remember, Warren Buffett's rule is pretty simple: buy low, sell high. And the problem is right now, a lot of people are not doing that. They're selling low, or they're getting off the ship and they're missing these big run-ups like Casey just mentioned. But stock should be a part of pretty much everyone's portfolio.
Well, let's one more. Mutual funds, we got time for it. I mean, we've talked about already ETFs, annuities, cash, individual securities, and now we're going to focus in on mutual funds. But this is BlackRock, the investment management corporation, asking nearly 3,000 retirees their favorite investments. But mutual funds, that's another one.
Yeah, 49% said that they use them. So 49% of the respondents. And so, millions of Americans trust mutual funds to do the work of building a nest egg, and understandably so. There's a high level of diversification. You can use index funds, lots of different companies inside of them. And so you can really create a diversified portfolio just with one or two mutual funds. Sometimes the question really becomes, how much are we paying for those mutual funds, which kind of ties back to what we were talking about with ETFs. But it's something that, again, it boils down to having a plan and having diversification across our investments.
Well, let's open it up, guys. Mark, I know that we've got the 10 spots. What's going to happen for these 10 callers?
Yeah, as Casey just mentioned, maybe if you've saved $250,000 or so or more, you've worked at Boeing or Weyerhaeuser, please, let's have a conversation about your individual situation. Let us help you build a plan that's going to make you successful. Take all the worry away, or the bulk of the worry away, because you're worried about where your income is going to come from, or what you're going to do with your assets, or what's happening with taxes. Please just pick up the phone, give us a call. We're here to help.
Elevate Your Wealth. You're listening to it. And of course, Elevated Financial Management, the power behind the program, offering up these 10 appointments right now. No cost, no obligation, no pressure. 866-668-3625. If you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. Call this number now. Grab an appointment. 866-668-3625. When we return, we're going to break down the biggest myths about, the A word, annuities. This stuff you really need to know before you make a decision. That's coming up next. Elevate Your Wealth. Your hosts, Mark Stimson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. 42 years combined experience in the retirement planning business, helping hundreds of their clients do what? Yes, get ready for their retirement. They are certified financial fiduciaries. We offer up positions on their calendar for our radio listeners each and every week. They're exclusive for you. And this is an opportunity that comes with no costs, no obligation, and no pressure. If you've saved at least $250,000 towards your retirement, these strategies, They're going to work best for you. The number to call to grab one right now, because we opened them up, 866-668-3625. One more time, 866-668-3625. Again, complimentary. All right, so when you hear the word annuity, and we've already kind of brushed this topic already today, but when you hear the word annuity, what comes to mind? All right, pause, think about it. Okay. Now, if all annuities are the same, and I don't want one, we have some good news. So they've changed, and mostly for the better. So we wanted to kind of take a look, and we've kind of talked about this, and we've gotten into the annuity conversation before, but I still believe that the annuity comes with a stigma. And I mean, if you start talking about it, people will react in probably a particular a way that you could have almost predicted. So, Mark, let's start. All annuities, again, these are the myths. All annuities are the same. They're exactly the same. Stay away.
Well, and you mentioned it, Morgan. I love doing a little survey at all the workshops that we do. And when I ask for a show of hands for those that have a negative bias or a negative view of annuities, a lot of times 50, maybe 80% of the room will raise their hand. So I like to play a little game with them. And so what I do is I say, okay, then what you've got to be willing to do, your Social Security check, when you get that each month, you got to sign it over to me and Casey. Same way with your pension, because all annuities and all pensions and Social Security are annuities. And they're like, you could just see the light bulb go off. They're like deer in the headlights. And when they find out how annuities really work, they're pleasantly surprised a lot of the time. But again, annuities are like stocks and bonds. There's a very wide range of not only carriers, but also benefits inside each annuity. We kind of talked about, is it a variable annuity? Is it a fixed annuity? Is it an immediate annuity? And so you've got to decide which one is what you need based on your circumstances. Another kind of myth is annuities all have just a really low rate of return. Well, that's absolutely not the case right now. In fact, some of the multi-year guarantee annuities out there right now, you could get upwards of 5.5% depending on the company. So these are, again, myths that people don't understand. So we love income annuities right now because we're creating private pensions with these annuities that are giving people the security of knowing that their income is going to come in every week or every month, and they don't have to worry about it. They're not thinking about it. I was able to sit next to a gentleman on a fishing trip Casey and I were just on, and he proceeded to share with me he's got 2 pensions and Social Security. And I happened to ask him, I said, how much income are you getting each month? And he said, right around almost $13,000 a month. Think about that. It's all coming in guaranteed because of his pension and Social Security. And guess what? All of his income is annuity, and he loves every penny of that. So please, if you have maybe a different view of that, do some education, come in and talk to us, and we'll be able to figure out if an annuity is right for your own situation.
I like the way you describe that, Mark. Create your own private pension. I mean, that's what you're doing, and you can build that with the annuity, but you need to, get educated on it and see if it's going to be a good fit for what you're trying to do in your retirement. We're going over some myths about the annuity. And again, it's what you probably currently believe, but we're actually giving you some reality. So again, myth, all annuities are the same. That's definitely a myth. Annuities have a low rate of return. Myth. All right, the next couple, Casey, we'll let you tackle these. Annuity fees are always sky high. Is that a myth? And then when I die, the insurance company's going to keep my money.
Let's talk about that first one, the fees. It's important to understand the fees for anything, right? Especially when it comes to our investments. And what we find is that folks truly don't understand their fees in their investment accounts. We definitely see that to be the case. And when it comes to annuities, sometimes there's a big misconception there. At the end of the day, there are some annuities that have high fees. And we've talked about this before. I think Mark even mentioned it earlier today. That variable annuities very commonly do come with high fees. And because of that, we don't see the benefit there. We don't see the value for the cost that they bring. And so with that, we don't use them inside of our clients' plans. It doesn't seem to make sense. There are other annuities that do not have any fee. There are annuities with much more reasonable fees. It's all depending on how it's being structured, what levers you're pulling inside of the annuity, what features that you need, what different benefits you're looking for with the annuity. Again, it's all customizable. It's custom tailored. And so at the end of the day, we only want to use things that are going to give us a true benefit for what the cost is. And so that cost is kind of relative to what we're actually getting. The circumstances that, like I said, some annuities have a 0% fee, doesn't actually cost you anything out of pocket. And there are some that have very reasonable fees, 1 to 1.5%. And there are some that have 4% fees, but we don't use those, right? So it's, again, about figuring out what's right in your circumstance. The next thing that we see, we hear this quite a bit, is that if I die, the insurance company keeps my money. If I purchase an annuity, the insurance company gets to keep all my money when I pass away. That is not the circumstance. At the end of the day, again, it boils down to how we're structuring the annuity, what levers we're pulling, how we're going to use that specific annuity. There are some circumstances, if you were to fully annuitize the contract, take a life-only payment, then yes, the insurance company would keep those dollars. You would be very well aware of that. We would never advise, or majority of the time, we would not advise our clients to structure it that way. There's so many other ways to structure an annuity to make sure that if something did happen to you, that money would pass to the next generation. And again, this is where sometimes one circumstance or one thought can really have a negative consequence on the overall concept of an annuity. But that's really not the circumstance that we see and the annuities that we use when we're building something out for a client. You want to add something to that, Mark?
Yeah, I was just going to say, there's one thing that Casey and I, we love to have full disclosure for our clients when it comes to fees. And the one thing that we know is if we help them manage what we call the red money, the money in the market over time, you're going to pay a lot more in fees having the money managed than you would ever pay, even in a fee structured annuity. You're going to pay over the lifetime. The fee never goes away, and it does on annuity. So I just wanted to add that sometimes people have no idea that over the long haul, fees on management of assets can run a lot higher than it can on an annuity.
Tell you, folks, so important to educate yourself. We're kind of going over and debunking the myths that are out there about annuities, and there's a stigma with annuity, just the word. Find out if possibly there could be a customized annuity that would fit well into what you want to do for retirement. So again, some of the myths we've thrown out, all annuities are the same. They're not. Annuities have just a low rate of return. Not always the case. Annuity fees are always sky high. No, myth. And then when I die, the insurance company keeps my money. No, folks, educate yourself. Look, opportunity to get on the calendar with Elevated Financial Management. Have these types of conversations. See what is a good fit for your retirement and your plan. And if you haven't started planning, this is an excellent opportunity to kickstart it. If you're in the middle of something, you need a second opinion, grab one of these appointments. We have 10 of them. 866-668-3625. It's no cost, no obligation, no pressure. Again, if you have at least $250,000 saved towards retirement, these strategies are going to work best for you. Again, 866-668-3625. You're going to walk out of the meeting with a written financial plan, and it's complimentary. All right, going back to the annuities, we've got time for a couple more of these. Talking about, again, Mark, we'll throw this at you. These are two myths. I won't be able to access my money if I need it. And here's another one. A deferred annuity isn't worth the wait.
Boy, and these are both exactly that, Morgan. They're myths. The one thing I want to say, most every contract that we deal with, every year after the first year, you can access 10% of that value, and there's no penalties to do that. And on top of that, most of these contracts that we write are qualified funds. So they're coming as money coming from a 401k or a TSP plan or a 403b, 457, which means if you take money out, you're going to pay tax on it. Our clients usually are never accessing more than 10% on an annual basis. The RMD requirement minimum distribution payout rate, is only 3.91. So that's just a myth. If you need more than 10%, we can take it out, and then we're going to be charged a surrender charge just like we would on a CD that we cash in early. It's not tied up like what people believe, and you have to do the math. And so I just want to debunk that because it's just not the way it is. Same way with a deferred annuity isn't worth the wait. Well, a deferred annuity is a great savings tool to house money that you're going to get maybe in the future. You're going to turn on income to supplement your Social Security benefit. So there's a lot of different ways to use a deferred annuity. So for it to say it's not worth the wait, that couldn't be farther from the truth. There is some very unique products out here now that give you some benefits that people, if you don't take the time to learn about them, you're going to be missing out on some wonderful benefits that can really stabilize and guarantee your income so that you don't stress one iota about it. And I can't overemphasize how important that really is.
Last myth we have time for, and I'll throw this one at Casey. An annuity will cover all my retirement needs.
I wish it would.
Yeah, wouldn't that be great? At the end of the day, I think what this really boils down to, there just is not a silver bullet to retirement, and that includes annuities. An annuity will potentially provide an income stream for you if you structure it that way, if it's built out properly. But you'll also want to have additional accounts with the right funds that are easy to access. You want to have a budget for retirement, all these kinds of things. And so, again, it's not the silver bullet. And we just went through all these different myths. And if some of these were new thoughts to you, that's why we structure things the way we structure them. That's why we offer a written financial plan put together by our team of certified financial planners. Now, Morgan, I know the phone lines are open, so let's just go ahead and let the folks know what we can expect at home. It really boils down to having a written financial plan. That's the key. As we've talked through the annuities today, we'll offer with that written financial plan an analysis on any annuities that you have. That's something that we do, and we're happy to have that discussion with you. Don't hesitate. Pick up the phone. Give us a call.
Here's the phone number, 866-668-3625. If you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. Call the number now. Grab one of the appointments. Complimentary, 866-668-3625. When we return on Elevate Your Wealth, it's time for Retirement Scenarios. Don't go anywhere. Welcome back into Elevate Your Wealth. Your hosts are Mark Stimson and Casey Elkins, 42 years combined experience in the retirement planning business. You can find them right here in Seattle. Elevated Financial Management. Check them out online, a great resource website, efmnw.com. All letters, efmnw.com. Their TV show, links there. You can watch them. Also, all of our radio shows are in podcast form. You can listen and watch to your heart's content. It is always about retirement. And again, the fellows are certified financial fiduciaries, helping hundreds of their clients get ready for their retirement. We want to help you too. That's why we do this show. There's going to be an opportunity to get on their calendar, so stay tuned. All right, so scenarios. I throw the scenarios at the fellas, and they handle it. All right, Casey, you get the first one. Here it is. 62 years old, trying to manage what I have in my stocks, and I've been looking into, annuities. This product sounds great because of fixed funds, but I don't know much about them. What are pros and cons of annuities versus, say, stocks?
Man, it's like annuity day on the show today.
Annuity day. We are anointing today. Annuity day. Go ahead.
Yeah. So, what it really boils down to, pros and cons of annuities, especially compared to stocks. I think the key takeaway here is that annuities do something that stocks, bonds, mutual funds, REITs, ETFs, those security investments can't do, which is provide a guaranteed income stream for the rest of your life. We can't structure your bonds in that way. We can't structure your mutual funds or your CDs or anything like that to give you a guaranteed income stream for the rest of your life, no matter how long you live. So that would be the first thing. The second, in reality, is that we can use an annuity to take some of the risk off the table inside of our portfolio. What we've seen over the last 18 months, maybe even a little longer than that now, is that folks historically folks have turned to bonds to create some level of lessening the risk in their portfolio, to create some level of safety. What we found is that with interest rates rising, the value of folks' bonds have gone down. Bonds have been volatile in that time frame, and so they haven't been the safe haven that people wanted them to be. And an annuity is a great place to put some funds that maybe would normally go into bonds. It's a great bond alternative. And so there's lots of different choices there. We've talked about it a little bit already on the show today, so I won't take it too much deeper than that. But at the end of the day, the annuity does something that stocks don't do, that bonds don't do, that ETFs and mutual funds don't do. Guaranteed income stream, true protection and diversification away from the stock market. And it's going to give you some upside as well. It's not going to be as aggressive as your stocks. You're not going to experience the same level of growth, but you also won't experience the downside that you see in the market. You want to add something to that, Mark?
I was going to say Casey has done a good job on this, but I just want to maybe reiterate the power of what he was just saying. If I've got a stock account, whether it's Fidelity, TD, Schwab, once I take all the money out of my account, right, the account goes to zero, I get no more payments. But I want you to think about the annuity. The cash value could run all the way down to zero inside your annuity contract. And let's say now you're 85 years old, you ran that account down to zero, you got paid for 15 years on that account. But guess what? That payment, even though the account is at zero, is going to continue. And it could grow depending on the type of payout that you chose at the beginning. So imagine that you got all your money back. You've been on the insurance company's money now, and that payment's not going to stop, even though the account's been taken all the way to zero. And that's what he's talking about. You can never outlive it. And that is a wonderful benefit and why we like Social Security so much. It's guaranteed, and it's going to protect our spouse. Well, the annuity can do the exact same thing.
Tell you, retirement planning, we talk about it each and every week here on the program. Just important to have that game plan. Work with professionals that do this on a daily basis, and map out what you're going to do all the way to your retirement date and, of course, through your entire retirement. Have that plan, and possibly, and man, we have been absolutely feasting on annuities today on this program. It's worth a conversation to have, maybe a good fit for what you want to do in retirement. All right, next scenario up, and Mark, we'll throw this one at you. 62 years old, plan to keep working until my full retirement age of 67. I've been divorced for many years, and someone told me that I can take my ex-spouse's Social Security because they made considerably more money than I did. Is this true, and will they find out?
Yeah, this is something I love. Social Security, as Casey knows, is something I love to talk about. I'm a nationally certified Social Security advisor, and there is some misconception about this when it comes to spousal benefit, survivor benefit. What happens as in this case if I'm divorced? Here's an interesting thing to think about. If you have been married for at least 10 years, divorced for 2, and let's say you had 3 different husbands over a 30-year period of time. Well, guess what? You get to pick which one of the 3 you want to draw on, and they can have no say whatsoever about it. You become what we call in this business independently entitled. So they do not have to be drawing for you to be able to receive that portion of their Social Security. Now, remember, you're going to pick, as I just mentioned, in 3 different people that you could draw on, 3 ex-husbands. You are going to pick one of them, right? And you're going to pick the highest. Now, remember, a spousal benefit is based, on their FRA amount, which people make a mistake of. Let's say that person waited till 70 to start drawing. Well, you don't get the 70 number. You get the 66 or 67 number, and you would get 50% of that as a spousal benefit. So there is a lot to good Social Security maximization and optimization that we want our clients to enjoy and to be able to get. And some people are out there winging it. They're not making good choices. They're starting at 62. We can show them Again, based on a lot of different scenarios, why that might not be the optimal choice. But again, it's based on your situation, not anybody else's. So please give us a call. Let us help you with Social Security because it'll make a tremendous difference in your lifetime benefit. You don't want to mess this up.
Going to be an opportunity to get on the calendar with Mark and Casey and the team at Elevated Financial Management. These appointments are exclusive to our radio listeners, and they are complimentary. All you got to do is call the number 866-668-3625. And if you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. And you can come in and have these types of conversations. Again, if you have not started planning, excellent opportunity to do so. If you're in the middle of something, feel like you need that second opinion, grab one of the appointments, 866-668-3625. All right, next scenario. Casey, this one for you. I invested in a 4-year fixed annuity several years ago to allocate a percentage of my portfolio into a vehicle that was conservative. At the time, it was the safest, risk-free investment recommended by my investment advisor. The annuity is set at 4% annually. I'm a long-term aggressive investor who makes about 12 to 15 trades a year. My retirement horizon is about 2 to 5 years away from right now. Is this a safe strategy going forward?
Well, the annuity is definitely a safe strategy. Managing your account aggressively, that's not necessarily a safe strategy. Doesn't mean there's anything wrong with it if you're doing a good job. But what I would say is that the annuity itself, using a fixed annuity like that gives you a stated rate of return for a certain time frame, that's a great place to put some funds to be conservative. And the thought process behind that is what I really want to highlight, because that's the key, is that we know that we're being aggressive with this other bucket of funds, but we don't want to do that for all of our investments. And we see that a lot where people are invested the same way for every dollar that they have. Every dollar they have is taking the same level of risk. And that's something that we want to try and diversify away from, so that we have some money that's conservative, some that's being a little bit more moderate or balanced, and then some other funds that are being more aggressive for the long term. And so doing it this way, where we're using an annuity to create a true level of protection, get a stated rate of return, and then investing other dollars differently is a great strategy, and it can work really, really well. In addition to that, if you do have an annuity that's a few years old and the time frame on that is running out, things have changed. Interest rates are up. We might be able to do better. So it would be time to start considering if there's a different annuity, a newer version, or different levers or options that we can pull that might give us a higher stated rate of return, or just give us some other features that maybe we don't currently have. But generally speaking, I love that idea. Be conservative with some of the funds and then take some aggressive positions with other dollars.
Yep, try and hit a home run.
Mm-hmm. That's right.
Final scenario. Mark, to you, what is the best investment option for me to grow my Roth IRA retirement account? ETFs, real estate, or maybe something else?
You know, that again is really almost like a loaded question, because we need to know what type of an investor you want to be. We didn't talk about this in one of the earlier segments when we were talking about the BlackRock survey that they did. There's other investments that people can use. And again, if you love real estate, well, real estate's going to be good for you then, right? It's not for everybody. What about ETFs? Kathy and I are both big fans of ETFs because they're low cost, but they can really give us a nice way to get into investments that won't cost us as much money. So we love ETFs. We know some people are putting money in cryptocurrency right now. What about maybe you're an entrepreneur and you have put money into your business because you think that's going to take off? See, so again, to answer that, it can be tough, right? Because it should be based on what your personality, your risk factor. Have you taken a risk score? Do you know how much risk are you really comfortable with? A lot of people that say that they're risky, when we do a risk analysis with them, they end up being a lot of times very conservative. So it's interesting to find out really where somebody is at when it comes to risk. And the type of investments that you should use to grow your Roth IRA or a traditional IRA or 401k should really be based on the amount of risk that you can withstand, because that's really going to help determine the type of investments that you may or may not want to use. There's no cookie cutter portfolio that you can set up, but it should be based on the amount of risk that you want to take.
All right, guys, we've got 10 spots on the calendar. What's going to happen for the next 10 callers?
You know, as we've just talked about, if you need some help figuring out a plan, please give us a call. Let our team of certified financial planners look at your situation. Let's talk about income. As we've just mentioned, your investments. Are you comfortable with everything that you're doing? Are you really ready for retirement? Are you kind of struggling with what to do? If you are a little bit, please, let's just have a conversation. Please, you can leave your checkbook at home. Let's just talk about your situation and put together a plan that you're going to be, I think, and we think you're going to be very, very excited about. Please pick up the phone, give us a call.
10 appointments, no cost, no obligation, no pressure. If you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. Here's the number, 866-668-3625. Claim one of those appointments right now, 866-668-3625. Another edition of Elevate Your Wealth is in the books for Mark Stimson and Casey Elkins. I'm Morgan Patrick. We will see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.